Good afternoon. Just want to check that everything is okay. Just give me a moment. If you can see me okay, can hear me all right, put it into the chat, let me know. Hey Gregory, how you doing? Give it a couple of moments before we get started. Hey Juha. Hey Jayanan. Sorry if I'm messing up your name. I'm doing very well, Gregory. Have a couple of good trades. Very happy. I've been trading gold a lot recently. Have you been trading much? Yeah, gold has been quite interesting. Hey Juha. If you have entered any trades, any questions about trades, get it ready, put it into the chat, let me know. I'll be happy to help you through those questions. It is, I past couple of days I've been selling gold. And then last night and today I've been buying gold. So it's quite weird. I think, we might see a retrace and then possibly back down again. Depends on a couple of things. Hey Thomas, how you doing? Hi SG. Hope you're well. What I'd like to do as well is, if you can, put it into the chat. Let me know, where are you joining me from? Love to find out. Super. I think I remember Juha from Finland. Finland, Germany, France. I guess I have to talk about the euro dollar then. Good day, Mel. Hey, and if you do have any other currency pairs that you'd like me to have a look at, I'll be, put it into the chat. I'll be happy to do that too. Alrighty, so let's give it one more minute and we shall get started. Gold. Hey, SG, we were just talking about gold. I have a lot to share about gold, so it'll be quite interesting. All right, let's get started. Thank you all for attending this session. Good to have you here together with me on this Thursday afternoon, morning, wherever you are around the world. What we have today, we're with IronFX on a webinar series doing the live trading session. So what we do during this session is I will be looking at the different charts. I'll be looking at the news. I'll be looking at the news that happened the last week. And then after that, what's happened this week as we're towards the end of the week. And then into next week, identifying some possible big news events that could give you a nice trade setup, potentially, right? We never know. So with that said, just a moment, pause. All righty. We've got the team here taking a picture, so I just had to pause for that. So with that said, as usual, a quick disclaimer before we move ahead. The information in this webinar should not be construed as investment advice or an investment recommendation, but instead as educational material only. What it means is that I will be looking at many different charts. I'll be looking at many different possible trade setups. Please do not just blindly jump into the trades. Make sure you check that it fits with your own trading strategy, your own trading methodology. And most importantly, check that you're not over leveraging, not over trading, right? Because based on my experience, coaching a lot of individuals like yourself, is not so much the one bad trade or even the strategy that's going to cause the most harm. It's the over trading, the over leveraging that's going to cause the most harm to your trading account. All right. So with that, just a quick introduction. My name is Jin Dao. Most of you will know me as Jin. I'm one of the prop trader market analysts here at the team of the finalists for the best FX research and best equity research in 2019, 2020, and 2021. All right. So again, let's get going. Take that away. All right. If you do have any questions at any point in time, please feel free, put them into the chat. I'll be happy to. I have the chat right here as well, so I'll be happy to address your questions as they come up. Just to give you a bit of a overview of how I approach my trades. I've been trading for, I always say 10 years, but it's more than 10 years now in the FX market. I do equity markets for myself. With that, how I actually look at the trade or possible trade entries, first, I always check the news. All right, so I'll do it a little bit differently from most other traders who just focus a lot on the technicals. I do look at the news quite a bit. I look at the news, the fundamental analysis, just to plan out, right? Just to get a directional bias of where prices should be heading towards. Then I'll look into the charts to identify if prices is moving to where I expect or moving in line with where I expect. So for example, if I'm, let's talk about gold. If I was looking at gold and I'm expecting it to drop, I'll be looking for selling opportunities. Then I'll look into the charts to look for price to break a key support level or bounce off a key resistance level before I get into a trade. Right, so I'll look to get my fundamental analysis or get my technical analysis to align with my fundamental analysis. Okay, so that's why when I look at when I guide you guys through this session, I always pay a lot of attention to the news first. Then we look into the charts to identify where prices could be heading towards. So far, so good. Any questions? If not, let's have a look at what happened since last week, right? On Thursday, 2nd of February, the second month of the year already. Thursday, 2nd of February till now, we had huge news on Thursday last week. Started off early on Thursday where we saw the US Federal Reserve increase interest rates, right? Increase interest rates by 25 basis point, taking it from a 4.5% to a 4.75%, right? So increased interest rates. What we saw, I'll show you here on the charts, on the dollar index, H1 time frame. Where was it? Here we are. On the 2nd of Feb, right there. Okay, so on the 2nd of Feb, when the news got released, interest rate increase, what we actually saw was the dollar dropping strongly. A little bit of a surprise. Anticipated that, as with an interest rate increase, we should see price moving up. It actually moved up briefly, but then during the press conference at 3:30 p.m., we actually saw this drop. Why did it drop? Is because during the press conference, again, coming back to the news here, 3:30, Chair Powell was speaking. Markets were anticipating a very hawkish Chair Powell, right? A very hawkish Chair Powell, but what we actually received was a slightly hawkish Chair Powell. And that's why the dollar index sold off during the press conference, right? Sold off during the press conference. Why was he being, not viewed as very hawkish, but only viewed as slightly hawkish or not hawkish enough? It's because he mentioned quite a bit about disinflation, right? Indicating that inflation is dropping, moving in line towards expectation, right? We can now say for the first time that this inflationary process has started, right? if inflation keeps dropping, then the likelihood of the Fed Reserve to keep increasing rates is going to be lower. And that's why markets viewed it as hawkish, but not as hawkish. So why did we say that it's hawkish? Is because he also said that policymakers did not see this as a time to pause. And also one more line where basically he said that it's unlikely they're going to see a rate cut in 2023. And then lastly, it's also we haven't made a decision on terminal rates, right? Not making a decision. What is terminal rates? Terminal rates is the final interest rate level, right? So not making a decision on terminal rates means that you could actually see the Fed Reserve continue to hike rates even higher than expected. I think right now they're expecting at about a 5.15 or 5.25%. So if they keep not deciding on terminal rates, we could see this climb higher than expected. So that's why we saw the dollar index drop, right? It dropped all the way through the news, through to the morning, and then into the evening, it started shooting up. That's where we saw that big upside on Thursday evening beginning and then continuing on to Friday. What happened on Thursday evening, was firstly the pound, right? The Bank of England with their interest rate decision from a 3.5% to a 4%, a 50 basis point rate hike from the Bank of England, taking interest rates to 4%. In this case, again, the pound dollar, I'll jump to the pound dollar here. Let me see if I can do this. Nope. Let's open one more. Bear with me a second. Right, in this case, the pound dollar on the Thursday at that time. Okay, so we can zoom in a bit here. On the news released, it was sitting right at that level. It shot up, came very close to our 1.24 price level, came all the way back down and reached that 1.227 level. If you were watching my sessions in the lead up to this news event, I was actually saying that we could have an opportunity to actually do a straddle at this point, and you would have actually caught both the upside and the downside move following this news. All right, so we saw this big jump and then the big track or correction towards the downside. Why so? Is because as much as the Bank of England increased interest rates by 50 basis points, Governor Bailey spoke and said that it might be sufficiently restrictive enough, and there were signs that inflation has turned the corner, right? So this signals that we could actually see the Bank of England slow down or pause on their interest rate hikes. Again, like what we said about for the US dollar, this signals that we're going to see, or markets were anticipating no more interest rates or slow down interest rate hikes. And that's why we saw the pound dollar weaken. So it shot up first because of the interest rate hike. And then during the comments, it came all the way back down, anticipating that pause in interest rates. And then lastly, for Thursday evening, we had the euro, the ECB, right? We got most of our viewers here are in the Eurozone or near the Eurozone as well. The ECB hiked rates from 2.5% to 3%. Okay, 2.5 to 3. I was watching the press conference. As much as President Lagarde was indicating, right, stressing over and over again this line, don't doubt our determination to achieve 2%, and saying that we anticipate growth will remain weak, that they're going to continue increasing interest rate hikes, significant hikes needed. As much as she was saying that, it's the same lines or the same statements that was said in the December meeting, right? Same as the one said in December meeting. So no real surprises there from the ECB. And because of that, what we actually saw on Thursday at 9 news release, it came back down, right? It failed to break above that 1.1 level, and then it came right down. So no surprises, despite a rate hike, despite the forward guidance that they're going to continue raising rates, we saw the euro dollar drop. Okay, as much as we saw that happen, it continued through to Friday. On Friday, we saw a massive drop across the board that was trading against the US dollar. Right, I'll show you the dollar index here. On Friday at 9 p.m. GMT +8, we saw the dollar index rise from that 101.60 price area up within the hour, up towards 102.60, almost 0.65. So a big push towards the upside, because on Friday, we had the non-farm payrolls, right? The US non-farm payrolls was released, and it was 223. Number was 223, expected to be 193, right? So it was only a small drop expected. What happened when it was released? 223 got revised up to 260, and it got released. The actual data got released at 517K. Massive release, bigger, a lot bigger than expected, than forecasted, and a lot bigger, almost double that of previous. That, and also with the unemployment rate dropping, was a 3.5. They were expecting a small increase to a 3.6. Surprised markets with a 3.4. So a big surprise here on the non-farm payrolls for the US. Good surprise as well. And that's why we saw the dollar index shooting towards upside and continuing trading higher, right? Continuing to trade higher. So that was all the news that we had from last week. We had the ISM services PMI data being released as well, from a 49.6, went well into the expansionary phase, right, of 55.2. Again, another driver to push the dollar index towards the upside. So that's what happened. I'll show it to you on the H4 time frame. We saw this big push since Thursday to Friday, all the way through to Monday, where the dollar index went all the way up to about that 103.76 level, right? A big push towards that key resistance level of 103.76. Why is that key resistance? If I dragged it right across, you can see that at this price level, we have actually seen price fluctuate around this point, even way back in December. And if I stretch all the way back, I think it came down. So it's a good support level turned resistance level, right? And that's why we saw price climb up to that point. Okay, all good so far? Any questions, do let me know. So from there on to Monday, Tuesday, Wednesday, Thursday this week, not a lot of news. We didn't have too much news for this week. Monday was quiet. There were news, but not big, hard impact news. So it's a little bit quiet there. On Tuesday, what we actually saw was the Aussie, right? The Aussie with the interest rate decision. The RBA increasing rates from a 3.1 to a 3.35%. A 25 basis point rate hike in this term, right, in this month, taking rates to a 3.35. What happened here on the Aussie dollar with that news release? Let me just do this and find Monday. Right, so on Tuesday, not Monday, sorry, on Tuesday at the news release, we actually saw the Aussie dollar push up, right, push towards upside, testing that near-term resistance level of 0.6948 or about that 0.6950 level. Right? Why did it shoot up? Typically, the Aussie dollar does drop when there is a interest rate hike because the RBA forward guides the market on their decision. Why did it go up this time? Is because in the rate statement, what we actually saw was that the RBA commented that further rate hikes are to be expected. Right? Further rate hikes are to be expected because they do want to try and bring inflation down to the 2 to 3%. You can see here, RBA warns of at least 2 more interest rate hikes in coming months as the economic outlook worsens. So it was a very hawkish statement accompanying the rate decision, and that's why we saw the Aussie dollar push towards upside. Later into the night, it went even higher, testing the other near-term resistance of 0.7, right? It tested around that 0.7 level or area. Why did it go up? Because on Wednesday morning, early Wednesday morning, 1:30 and 1:40 a.m., Fed Chair Powell was speaking. Fed Chair Powell was speaking, not usually a big news event, especially when he was speaking at the Economic Club of Washington, but he was actually further elaborating on the policy decision from last week. Right? He was talking about policy decision from last week. He was talking about disinflation. He was talking about he touched on a little bit on the Fed Reserve's plan in terms of interest rate hikes into the future. And that's why when the news was released, or when the talk was happening, at that time we saw firstly the dollar strengthening and then retracing right after he finished the talk, right? And then it continued back up with the trend. So that was all the news that happened since Thursday last week all the way through to now. Today being Thursday again. Right now, we actually do have the pound or the UK with their monetary policy report hearings. We just, as we started this session, had the Euro economic forecast being released as well. I haven't seen any of this because I was preparing for this session, but you can see just based on the headlines, the Bank of England, we're now seeing some signs of loosening in the market, in the labor market. We're expecting inflation to come down rapidly this year, again, possibly reinforcing that idea that the Bank of England could slow down or pause on their future rate hikes. I see considerable upside risk to the CPI forecast, right? So that's quite interesting, a bit of a mixed message coming during the monetary policy report hearings, okay? And then the EU economic forecast, I haven't seen that yet, but I won't go into details. It's quite a lengthy topic on that, okay? With that, what else to pay attention to? Tomorrow, Friday, we do have the pound with their GDP data being released month on month, was a 0.1%, expected to be a minus 0.3%. Expecting bad news for the UK, could see the pound dollar trade lower. Then the focus will shift for Friday onto the Canadian dollar, with the employment change data likely to go from 104 to a 15K. Big drop there expected. The unemployment rate looking to climb slightly from 5 to a 5.1%. Okay, so focus on the Canadian dollar. I do see your questions there on gold and Brent, and gold and Brent. I will get to that, but I'm just showing you which ones to pay attention to as well in the next couple of days ahead. On Monday, we do have the Swiss franc with their CPI data. I don't think this will be a huge price mover because it's a month-on-month data, but it's good to pay attention to that. On to Tuesday at 3 p.m. GMT +8, we do have the UK with the employment data, claimant count change, average earnings index, and unemployment rate. I don't think, as much as these are important data, I don't think this will be moving prices too much, because the main focus onto Tuesday next weekend, 14th of Feb, Valentine's Day, just to spoil everyone's Valentine's Day, there is a CPI data to be released. US inflation data year on year currently at 6.5%. If it gets released at lower than 6.5%, we're going to see significant weakening in the dollar. All right, if we see it lower than 6.5%, we're going to see significant weakening in the dollar index. Why? Because that's showing that inflation is dropping. That's going to give the Fed Reserve more confidence to slow down, or to probably consider that interest rate has peaked and that they don't have to increase rates as much or as quickly. Right, so that's going to be a big news event, 9:30 GMT +8 on the 14th of Feb, US inflation data year on year to be released. Wednesday, pound with their CPI data year on year as well. Big news event. If this turns down, again, expect to see the pound dollar trade significantly lower for the same reasons I just explained to you. And then on to the retail sales data, I think does have some volatility inbuilt into this data release, but with what would have just happened a day before, I think we might still be reeling from that impact. Maybe might not be as big a move with the retail sales data being released. And then PPI and core PPI data on Thursday, following on to not much on Friday. All right, so you can see here that the main focus onto tomorrow all the way through to next week, the pound, the dollar for sure, with a few data to be released. For sure, the dollar is going to see a lot of volatility with that inflation data to be released, and then also the CAD with their employment data due tomorrow. Okay, so with that, let's look into the charts now at what could happen. The dollar index is reversing quite strongly. Right, I see a nice pin bar there, so it's reversing from that 103.73 level, trading towards the downside. Initially, I was thinking that this might be a consolidation. So at first, I was just looking at this, thinking that it's going to consolidate around this range, possibly push higher towards the upside, with the next resistance at that 105.60 level. But what's actually happening, you see it breaking down. It's breaking below this 103 level. So with the dollar index breaking 103, I wouldn't be thinking there's going to be a big move yet, unless it breaks below this previous swing high. Right, this previous high, we do see a bit of a gap in this case. So I'm looking for it to break below that 102.80 level before we could see significant downside. Right, we could see significant downside on the dollar index if it breaks below that 102.80 level. This means that if you're anticipating the dollar to drop, this could mean that right across the board, all the other currency pairs against the dollar, we're going to see possibly good, significant upside. With that, based on the request, let's look at gold. I have been trading gold a lot. Where's my gold? There we go. Clear out the charts for a while. Okay, So gold on the H1 time frame here, right? Gold on the H1 time frame. Why I've been very keen on it. I saw a support level at that 1863, right? Round number at about the almost the 1860 level, but we can say 1863. Why? It's because it tested this area here again and came very close at these points. The high initially was at about that point, 1880, right? I was identifying 1880, 1881 as a high because we saw it test and reject. We saw it test and reject. And just last night, we saw it break up and then retrace back down again. All right, and retrace back down again. So today I was actually just thinking, okay, gold is going to trade within this range. It's going to go up, hit the level, turn back down, go up, hit the level, turn back down, try to break up, and then turn back down again. But prices started pushing towards the upside, right? So this was today at about 9 a.m. We saw prices push up, and then it looked to break above this 1880 level, right? Look to break above this 1880 level. And that's where I started looking to buy this up. Just for the short term, quick scalps towards the upside, buying it up towards that 1886 level, right? The previous high from yesterday, I was looking for it to hit that level and then turn back down again. Okay, so with the view that we could see the dollar breaking down quite significantly, I would actually flip a bit of the analysis and say, now let's look if gold is going to break above 1886 and trade towards the upside. Because remember of the inverse relationship with gold and the dollar index. Dollar index dropping, we should be seeing gold push up. In this case, now it's sitting right across. If it pushes up, can it get to 1911? Can it get to 1911? Could. Never say never on gold. It could get there. But I do see that round number level of 1900 as a possible hesitation level. And also if I did a fib level down, let me just do this. You can see that we do have that 61.8 very close to that 1900 level. Okay, so I'll do this and you can see there. All right, so I'll be looking, right? If I'm doing this for the shorter medium term, I would say that we could see gold, if it does break above this level of 1886, we could see it climb towards 1896, right? Climb up towards 1896. And only if it breaks above this level, then we could see 1911. That would mean that the dollar index would have to drop all the way towards the downside, big downward move on the dollar index. Okay, I think if you were looking to sell on gold, I think that it might not be the best time. It might not be the best time to be looking to sell on gold at this point, unless we see a big reversal on the dollar index. Right? Unless we see a big reversal on the dollar index. And another reason why I would say it's not the best time to be looking to sell on gold. If it did break, ultimately you could have about a 1:3 risk to reward ratio towards the upside on gold. Right? A very safe, big stop loss here. Take profit towards the upside. You could see, that move. If it reversed to trade down, then you'd be looking to sell down. And in this case, your stop loss would be about that point. Take profit about that point. You're looking at the very best 1:2, right? A 1:2 risk to reward ratio. So naturally, if we're expecting the dollar index to push towards the downside, this to push up, I will be looking for this trade up. Great risk to reward. aligns with the correlation on the dollar index, seeing that big push up. Makes sense to all of you? Everyone who's asking about gold? All good. Any further questions on gold? Let me know. If not, then we'll look at Brent. Sure thing, SG. All right, so looking at Brent, we saw big upside moves, right? We've seen big upside moves on Brent since Tuesday. And you can see that if I did, I don't think this will fit nicely, right? Quite close, follows that trend line towards the upside. Okay, let me try a channel in this case. No worries, Gregory. Hope it helps with your analysis as well in your trades. Right, you can see Brent trading higher. Why did it push towards the upside here? One of the reasons we see a big push on energy, especially on Brent, is because of the unfortunate event in Turkey. Right, the earthquake in Turkey has led to a disruption of supply in Brent. With a disruption of supply, which means less supply with the same demand, we're likely to see prices pushing towards the upside. In addition to the disruption of supply, what we actually see is an increased or potentially an increase or anticipation of an increase in demand for oil or for energy because of the opening up of the Chinese borders. So that supported that push towards the upside. Okay, you can see this trading higher. Key levels on energy prices are usually paid very well respected. You can see at that 83.54, 55 level. We formed it at this point and this point here, and then it just got respected right across. It got respected right across. So right now, pushing higher along that channel. Where could it get up to? Sure, upper level of the channel is at 87, but we do have a level here at about 86. Right now at 85.38, could get to 86. Beyond that, a big key level at 88.58. Right, at 88.58. So how does Brent correlate with the dollar index? What we've actually seen, and I'll show you here as well. Right, I wouldn't try and figure out how to do it side by side. I mess that up all the time. Let me find that big news event. Where was it? On the 2nd of Feb at 3 a.m. About there, right? That push towards up. We saw this big drop on the 1st of Feb and then a push back up again. Okay, no, this one. So on Friday, we saw the dollar. Remember the dollar getting very strong, pushing higher. What we actually saw at that same time was Brent traded up, but then we saw that big reverse, right? It's not a perfect correlation, right? It's not a perfect correlation in terms of Brent and the dollar, but you do see a bit of an inverse relationship on Brent and the dollar. A bit of an inverse relationship, not perfect and not immediate. This is slightly delayed. We actually see as much as the dollar strengthened, we saw Brent pushing towards the downside, right? Pushing towards the downside. So hope I answered your question there, Juha, in terms of the correlation between Brent and the dollar index. So again, now expecting the dollar to drop, expecting the weakness on the dollar, we could see Brent push up, being supported by that channel, pushing up towards that previous high. We also have a point there about 87. So good levels that we can be looking for. Don't do this right now. Don't do this right now. But if you were looking to buy, you could even be looking at that point. take profit, stop loss just below the channel as it gets supported as a diagonal support level. So your stop loss will be below that. You're looking at a 1:1.7, almost 1:3 towards the upside there for Brent. Okay, then you have a hesitation level there at 86. All good. Makes sense. With that, then we look at the euro because we have a lot of people in the eurozone. Same thing. Dollar index dropping, further drops expected. We actually saw, take all that away, we actually saw just recently, this is on the hourly chart, just the previous or the current hour and the previous hour breaking above that previous high, right? Breaking above the equal high even. If I drag this just to the top, we're still within that resistance range, right? The range or the area of the resistance. So a little bit early to buy. I wouldn't get in right now. I would say look for it to break, possibly to be extra safe above this 1.0780 level. Right? Where can it get to? It's not going to, I don't think it's going to get to 1.09. Would be nice. I'll be happy to buy it up, but I don't think you'll get all the way up towards that point as much as it's a key level. But what you could be looking for in this case is this. Let me just see, check my fib levels. It could get, see, you can see that hesitation here. So again, 61.8, right? It could come to this point here. So I would say that we do have a point at about 1.0838 or 1.0840, right? So that's quite a good move towards the upside. Give it some time, let that candle close. I do prefer to enter a trade on the close of a candle, right? On the close of a candle. So I want it to close above this high, this line here, and possibly close to or above that 1.0780 level. Then I'll be looking for a buying opportunity about that point. Take profit, 55, stop loss. You can go quite tight at about 25 or 1:2 risk to reward ratio towards the upside there on the euro dollar. All right, you can see that's actually moving. If you were feeling a bit more aggressive, you're a bit more of a risk taker, you could be looking, it doesn't have to break above 1.0780. Candle close bullish, we could be looking at that upside potential. Pay attention to what's happening here on the dollar index, expecting it or looking for it to break below that level. But then we can see that significant downside potential. Alrighty. Pound also trading up. I think that we could see it, right? It needs to get above this point, maybe above that 1.22 level. I think in the middle here, it's just a little bit too risky to try and buy it up. You know, give it a bit more space. Let me just clear this out. Give it a bit more space above 1.22. We could see further upside towards that 1.23 or 1.24 level. I don't think it would move all the way up because remember, we do have onto tomorrow, we do have the GDP number to be released, expecting a bad data there. So, you know, I think that we could see some upside, but then we could see it trace back down again. Oh, okay. So you can see today's EU economic forecast got delayed 24 hours later due to source rescheduling. That's why we're not seeing that big volatility at this point. Okay, so this point could see it. I would rather, I'll tell you what I'd rather be looking for is for the pound dollar to climb up, test that 1.22 level and reverse. If that happens, climbs up, test the level to reverse, then I'll prefer to be looking for that selling opportunity towards the downside. stop loss can be quite tight, 30, 40 pips, take profit towards the previous level, swing low level. You're looking at a 1:3 risk to reward ratio. All you need to do, or the main thing you need to do, wait for it to climb towards 1.22, look for it to reject 1.22 before we could see that big downside move. Makes sense. We do have a bit of a let me see, how would we do this? We do have a bit of a gap at this point as well. So I do think that it's going to climb back up into this range before we see it trace back down again. Good stuff. Any questions? Any further questions at this point? I'll share with you one of the views I've been looking at on the yen. On yen is that as price has been trading, I was looking at this as it was trading within or support push down from this trend line, this downward bearish trend line. How do I do this? Okay, never mind. Okay, this bearish trend line that is broken. So it broke this towards upside on Friday. What I was actually looking for is further upside potential. Right? I was actually looking at this, and bear in mind this is on the daily time frame. So this is a big move expected. Right? And usually with a big move, you could actually be looking at more volatility, definitely longer time frame. I was looking for it to break above 1.33 or above that 1.34 level, right? So I know the 23.6 level is here. If it breaks above that point with a resistance at 1.34, about there, I was looking to say, okay, if that happened, breaking above a fib level, big retracement towards upside, could I be looking for a buying opportunity back up towards that 61.8 level? Stop loss below this point. It'd be a big trade, almost 1:4 risk reward ratio towards upside on the US yen daily time frame. Big correction towards upside. So bear in mind, this is a counter trend trade. So right now I'm looking to see if this level is going to hold. If it's going to hold, then we could see this push back up. With the way we're looking at the dollar index possibly going to weaken, looks like it might not play out, but let's look and see what happens. All right. Any questions? Any questions? Let's look at nothing much there. Okay, US CAD. Right, we know that there's a lot of CAD news to be released. This is on the hourly time frame. Again, upward potential has been 2 points there, so it could come down to this level, test and bounce back up, and then pay attention to the horizontal resistance at that 1.3456 or 1.3460 level. What could happen is that we're going to see this continue within this fashion. Okay, so we could actually see this come down, test, and bounce within this range. If that happens and it bounces around that level, I'll zoom out and I'll show you again. You can see that just dragging this right across or even right there. Big key resistance at that 1.3470 level. What we could be looking for is if it breaks this trend line, right? If it breaks that trend line, then we could see a big downward move, right? Breaks that trend line, we could see a big downward move. Bit similar to what I see here. So a steeper trend line towards upside. Right? See price trading along that. Once it broke that level, we saw it break quite strongly towards the downside. Make sense? Hey, we've gone through we went through gold, we went through Canadian dollar, went through the euro, Brent, pound, and yen, which would be a pair that you would be quite interested in. Is it interesting to trade exotic pair like with what happened in Turkey with the earthquake? I don't focus on the exotic pairs for several reasons. One being liquidity and price spreads, right? So you need to pay a lot of attention to the spreads because, with an earthquake, with a natural disaster, what could happen is that spreads get widened very significantly, right? Spreads could widen very significantly. So just be extra careful if you're looking at exotic pairs. And then we could see, prices being gapped in different directions. I know these are not exactly exotic pairs, but no. Yeah, I don't have any particularly exotic pair here. That's my watch list, so I don't normally look at too exotic a pair. Do you look at any particular exotic pairs, Gregory? I think the biggest natural disaster event that I traded was during the Japanese tsunami, where we saw huge volatility on the yen, and that was spiking up and correcting down all over the place. So it was very exciting to trade, but very dangerous to trade as well. Is the ruble trading? It is. I saw a news. I think it is. I saw a news on the ruble. There you go. Russian ruble slumps to weakest versus the dollar since late April. Right, to the weakest since late April. Russian ruble. Let's have a look at it. Euro. Has it done well? Hasn't gone too bad. We could see when if a continue. Well, see, the thing is, the earthquake has happened already. We saw during that period, we saw it drop, test that level, and then bounce back up. So, there are a lot of things to consider when you are trading a natural disaster event. What tends to happen is that it will weaken, right? The first shock is that prices of the country will weaken, currency of the country will weaken. But then also what happens, especially for like earthquakes and for in Japan that time during the tsunami, it strengthened quite twice as quickly, right? The first hit was a weakening because of a bad news. And then the next move was a massive strengthening because the demand for the currency was there. Firstly, as it weakens, it's a good buying opportunity. And then secondly, understanding that a rebuilding process was going to be necessary. Right? A rebuilding process was going to be necessary. And what do you need when you have a rebuilding process? You need the currency. And that's why you're going to see that big choppy. I don't think this was because of the earthquake, but you're going to see big choppy price levels like that. Okay, just let me check. Just for so it's 2021. Okay, let's see if I can get that data for you guys. Oh, 2011, sorry. Okay, I think it was, no, can't get it. No, wait, hourly time frame, daily time frame. Can I get that? Let me see. Doesn't seem to let me get there. What if I scrolled? Okay, there we go. When was that? It happened on March, right? It happened in March 2011 in March, and that's where you see that happen, right? So that, just to show you an example of a natural disaster event, Japanese on the 11th of March 2011. So that was the 11th of March at that point, right? Tsunami hit. Over the next couple of days, we saw a big weakening, strengthening of the yen, right? It pushed all the way down, and then after that, a big weakening all the way back up, and then we're back down again. So, it's not that straightforward of just a big sell-off or big buy it up. We see big spikes on these kind of events. So yeah, just be extra careful if you're looking to trade that event. All right. Any further questions as we come towards the end of the session? Do let me know. All right. Okay. If you have no further questions, what I will remind you all is that we do have a lot of big news events, especially the inflation data for the US, for the UK coming up next week. Please remember, trade well, trade safe. If you are trading the news, what I would suggest is to size it down, take less risk, participate in the news event, but size down and take less risk, right? Manage the leverage, and make sure you're not over trading. With that said, any further questions? If not, do trade well, trade safe, and I'll see you again. Take care now. Bye-bye.